Hello, everyone. This is Lesego coming from you from a Take Profit FX Pro initiative. In this video, we will be discussing orders. Orders are used in trading platforms or for trading currencies, forex, commodities, indices, etc., etc. So when you are trading, you must know which type of orders do you use to suit your needs. So without even further ado, we are about to speak in details the types of orders which are there and which you can use to better your skills or your knowledge in the trading market. Firstly, there are two types of orders, which one, market orders. Number two, there are pending orders. So with the market orders, the type of market order is a type of an order which you buy or you sell at the current market price. And with the pending orders is the type of order in which you buy below or sell above the current market price. There is only one type of a market order, which is instant execution. An instant execution order is when you place a buy or a sell trade and it runs immediately at that current market price. Like the definition, how I defined it, it is self-explanatory. But we will be looking at the conceptual point of view or the conceptual view of it, meaning we will be discussing it further graphically and on the markets. On the pending orders, which is the type of order in which you buy below or you sell above the current market price, there are four types instead of one, types of pending orders. There is a buy limit, which the order is placed below the price and then price will go up. There is a buy stop where the order is placed above the price and the price still goes up. So with the buy limit, the stop limit, remember it's a buy. So with a buy, price is supposed to go up, go bullish. On the other hand, on the sell limit, you place an order above and above the current market price, and then the price goes down. And the sell stop, the order is placed above and the price above the current market price or the current price, and then current market price, and then the price goes down. So let us look at what we've been explaining. On an instant execution, arrows represent price. The red line represents an order. So in an instant execution, if price is currently there, if price is currently on the red line and we place a buy trade or a sell trade, and the trade will run at that current market price. So it runs immediately. Where else on a buy limit, the order, this is our order, the red line, and then let's say price was still here. Price was still there here on the buy limit. If price was still there and then we placed our order, we have to wait for price to reach our order, which was below, before price starts to go up. On a buy stop, the order is placed above and the price still goes up. Let's say price was here when you placed your order there, up. Your order is above the price. Let's say the price was here. Price was below. Price is below your order, meaning your order is above the price. In this case, you wait for price to hit your point and still go up. I hope you can see the difference between the two. Moving on to a sell limit. On a sell limit, the order is placed above the price. So let's say this was price. This is the current market price here at this point, which is 0.96071. And then you place your order there. So you place your order above the price, and then you wait for price to reach your order, which you placed a sell limit and should go down. Where else in a sell stop, your order is placed below your price, below your current price. And then the current price has to hit that order or reach that level where you placed your order and continue to go down. So next, we will be looking at it on MetaTrader or on the current chart, on any chart, and we will be discussing it further. Let's take a look at a buy limit. Remember, I said a buy limit, the order is placed below the price and then the price goes up. Like as you can see, this is an uptrend. So in an uptrend, and if we want to place a buy limit, what are we going to do? For example, I'll just wait for price to get to this point. When price gets to this point over here, that would be this point right here would be where I placed my buy limit. I'm just going to use this one so that I can see the numbers. So when price gets to 1.36528, it will trigger my what? My buy order. So obviously, buy limit, right? My SL will be below that limit. For example, I'm not saying this is where you should place your stop loss, but I'm just going to use this for an example. I will say my stop loss will be 1 point. Obviously, it will be below my buy limit, my order, 1.36200. And my take profit will be, okay, my buy limit will be at price of, would be at price 1.36528. My stop loss, I already wrote it. My take profit will be 1.37400. As you can see, ladies and gents, this are my parameters for this. Place a buy limit at price of 1.36528. My stop loss will obviously be below because it's a buy. When you're entering a buy trade, the stop loss has to be less in value than the current market price and where price is currently. And the take profit has to be obviously more than where the price is. Moving on to the next order, which is a buy stop. Remember, with the buy stop, we said the order has to be placed above the current price, and then the market or the price has to go up and clear that order. So we're going to use the Audi JPY, the Australian dollar JPY, as an example. We want to place our buy stop here. which meets the requirement of it being a buy stop, because the order now is above the current price. So what should happen? We have to wait for price to go there. As soon as it reaches this, our order will be triggered, meaning our trade will be triggered, will be running as a buy. What will happen? We will expect our trade, after being triggered, after reaching this point of our order, to actually continue going up. If it happens that it reaches this point and it goes down, we are losing. We are on a losing trade, because we opened a buy stop order, meaning it has to trigger, go up, and continue going up. Let's look at the practical examples on how we would actually put our stop loss and our take profits into this buy stop order. So our buy stop order will be here. We expect it to be here to be triggered. For example, I'm not saying this is where exactly you should put your stop loss, but we're just putting it into a practical form so that you can see. And then let's say our take profit will be here on the highest high, and then our stop loss will be on our lowest low. So how would our parameters be? Our parameters would be our buy stop order would be at the price. So this is where it would be. This is the price, where the price would be 82.883. Our SL, which is our stop loss, would be on this one, 82.048. And lastly, our take profit would be at 83.738. This is our buy stop order. This is actually where our parameters would be like. So these are our parameters. So without even wasting more time, let's move on to our sell limit. Now, with the sell limit, the order has to be above the price, and then the price has to go down. Remember, with the buy stop, the order has to be above also, but now the price has to go up. This one, the price has to go down. It has to be like this, meaning price has to reach this point and continue to go down, because this is a sell. Keyword sell limits. Sell limit. If, however, it gets there and continues to go like this, we will be on a losing trade. So we are expecting price, when it hits here, to actually go down. So let us see. With our sell limit, our order will still be on this point. Our take profit, let's put it here on the lowest low for the day. And then I'll put it somewhere around here, my stop loss on the most recent high, which is this one on top of it, just on top. But I'm not saying that's where all your stop losses. I'm just using this as an example, so that you can understand that with a sell, any sell, their stop loss always has to be above, because it's a sell trade. So now our stop loss for let's do this. This is now a sell limit, whereby the price, the order is placed above the current market price, and then the price has to reach that order and then has to go down. So I shouldn't have 82.887, which is where we placed our, would be 83.271. And finally, our take profit would be around 82.119. This is how you guys hits this point, a running trade from there. And then whether it goes back on your analysis and your skill set, then whether you will win a trade or lose it, it will all depend on that. But if it happens that price doesn't reach this point, it only turns around here, it doesn't reach that, and the order will be triggered. The trade will be triggered. If, however, the order does reach and overlap the place like this, yes, the order will be triggered, meaning the trade will be running. So it all will depend on your strategy and your analysis, whether
it reaches this point and never gets triggered, because it can do this. I've seen instances where price doesn't reach your estimated point or level or amount, but it goes in the direction in which you have analyzed. It does happen in this case. So I can say, yeah, there could be a disadvantage for using orders, pending orders, because when you're using market, instantly point out using technical analysis price action that the market will actually turn around. But that's not always the case. Sometimes these levels are very strong. These levels are very strong, whereby it'll almost be impossible for price not to turn there. But although it does happen. On to the last one, we have a sell stop order. Sell stop, this one will be slightly different than the sell limit. In this case, a sell stop order, the order has to be placed below the current market price, and then price has to continue going down to that level. So in this case, our sell order should be somewhere here, because the price itself has to be above, meaning the order has to be below the current market price. And then price has to continue going to that level. It has to continue going to this level which is our current market price. And then whether it continues to go down or turns, in this case, it will all depend on your analysis and your strategy. This is where it goes. And if you don't know anything about the strategies and the analysis, you can contact me via social media or through my numbers directly. And we can give you a course, a mentorship program, in which can help you with a very, very, very solid and accurate and efficient strategy, which works on all currency pairs, and whether it's cryptocurrency, whether it's normal forex pairs, it works on everything. So moving on, let's see how we would put our stop losses and our take profits on the sell stop. Remember that the order has to be below the current market price. And this is a sell, keyword sell, meaning it's a sell trade. Basically, in its own nature, it's a sell trade. So if price hits our order here, price has to be here. And our stop loss, for argument's sake, remember, this is not always the case where I put my stop losses, but just to be practical, I would put it above the most recent high, because this is a downtrend. And now let's see our parameters. It's a sell stop at the market price of, let's see this one, 82.474. Our stop loss would be 83.046. And lastly, our take profit will be at 82.126. Then we are done. As you can see, price is currently above. As you can see, the current price is above all these three parameters. Our current price is above all of them. Our trade will only run as a sell trade when price reaches the level of 82.474, which is where the red line is. This is where our order is. But currently price is at 82.675. Obviously, the stop loss has to be above also everything. So I hope this has been a very, very this will bring a very big impact into your trading knowledge, in which there are people that use buy orders, sell orders, and those are incorporated into their strategies. From your host, Lesego, coming to you from Take Profit FX Pro. This has been a very good session. Thank you.